Hey, everybody. I am Julian Hebron, and I am just your webinar host today. But we're gonna wait. We're gonna watch here as the participants tick up, and I don't want to spoil any intros today while we're waiting for people to join in. It's always fun to watch the numbers tick up here. So we're gonna let that run so nobody misses anything. If you're just signing on and you're hearing me talking, it's nothing that you have missed yet. We haven't done any intros. We haven't teed up the topic yet. We're just waiting for some of you guys to get in and get settled, and then we will get started. And I will do formal intros, but if I could just get a sound check, Alex, Jerry, Robin, from you guys, and just say hello and make sure we can hear you.
Hello,
everyone.
Hi, everyone.
Awesome. Cool. So we will do a formal intro here in about another, let's give it like another 30 to 60 seconds to let folks trickle in, and then we will get started. And I just realized that I need to plug in my laptop, good old fashioned self-production here.
That's right.
Okay, but I think we've got, a good crowd going here, and in the interest of everyone who got in on time, we're going to go ahead and get started. And if other folks start trickling in, you're not going to miss much in the early minutes, but I do want to get started with some intros for everybody. So first, I'm Julian Hebron. I'm the founder of the Basis Point, and we're a sales and strategy consultancy for banks, lenders, and fintech in this space. And we've been in mortgage and housing for a long time. I think I know a lot of you who are coming today, and I was honored to be asked to host today. And so today is this joint webinar on this kind of major market transition that we're all going through right now. I think this is a pretty common topic that has been covered lately, but with who we have today, I think that you're going to find that you're going to hear a bunch of stuff that you haven't heard, very tactical, pragmatic items that are going to be very useful. So I want to introduce our panelists, and then we're going to get into a bunch of material. So I wanted everyone to be on screen, and then we're going to share a deck with you guys. But I want to kick off with, if you will, the guest of honor today. That's Robin Clayton. So she's the head of digital for PRMG. And so, Robin, if you could just say hey one more time, make sure everyone's...
Everyone, glad to be here.
Yes, it's awesome to have you. So you guys are going to see here in a minute. I think everyone knows PRMG is a very formidable multi-channel shop. I think it's a very influential shop in space because of all of its discipline. And Robin's one of the key players behind all of that. And it's not just about, if you will, digital. Anyone can say digital. Robin is somebody who's in the weeds on this and has a specific affinity for analytics, what's working, what's not. We're going to cover all of that today. And then next we have Alex Kutsishin. He is the founder of Sales Boomerang. I think mostly everybody knows him. Sales Boomerang really kind of burst on to the tech partner scene in recent years and already has over 130 lender partners out there in the space. And Alex, if you could say hello, I have to make some fun, quick remarks about you too, but say hello, make sure we got you clear.
Awesome. Yes. Hi, everyone. So excited to be here. And by the way, real quick, I am visiting Boston. So if you have any good tips for restaurants or things to see in Boston, throw them in the chat. I'd like to see.
Perfect.
I like to check things out.
So you guys are going to see in a minute. I mean, anyone who has had the privilege of watching this guy present, it's not only that he totally deeply cares about this space and serving the space, but it's just super fun. And I mean, there's two fun ones for me, like where he showed up, talking about, farming your prospects, and he showed up with like bales of hay at a conference a couple of years ago. And then another one where he was walking around with like a backpack full of, Hollywood money, and talking about, this is how you break through not only to loan officers, but also to, all of the managers and execs that build and run these tech stacks to serve loan officers. So we can get into all that today. So I'm super excited about that. And then I think most of you should know, but for those of you guys who don't know Jerry Halbrook, this is a stalwart in the industry, period. So he ran originations, which is one of three major divisions of Black Knight, which is, as most people know, one of the, if not the major ecosystem company in the space. So he knows a thing or two about the space up and down the line, and now runs Volly, which is a fully comprehensive marketing and engagement platform with multiple components. And we're going to get into some of that today in a very pragmatic way. But Jerry, I hope you can also say hello, do a sound check.
Yep. Oh, happy to be here. And Julian uses the word stalwart to mean old. So I've been
not at all. But that's what's so, I think it's my job to make sure that folks know of the street cred. The industry moves really fast, and one of the things about one of your major predecessor orgs, as well as just your MO today, is that quietly operating and pulling a lot of strings behind the scenes is why I emphasize that, because there's so many of these wonderful quiet leaders in our space, and Jerry's definitely one of them. So with that, let's jump in. I'm going to share the screen. I'm just going to call out and make sure that you guys can. So can you guys see this? Can everybody see it?
Yep.
Okay,
Looks
cool.
great.
Awesome. So here, we're just going to jump right in, and it's going to go as follows. I'm going to do a quick market setup, and then we are just going to jump right into very pragmatic tactics and playbook stuff. So it's going to be fun, fluid. And if you guys do have questions, fire them into the Q&A box below, along with your restaurant recommendations in the chat. Those are two separate functions. But yeah, ask questions as you go, and we will hit those when we come to the end. So here we go. I just want to kind of quickly give some stats that everyone knows the stats, but I want to kind of make some quick notes about the stats that at the basis point we believe are important and often underemphasized. So let's first very, very quickly compare refi only last year to this year. So 2.4 trillion versus 1.8 trillion. Anyone who's been doing this for a minute knows that at roughly a $2 trillion year in aggregate with purchase and refinance is a good year in the mortgage space. So for anyone that's like, oh my God, refis are falling off, these are all the headlines. Here's the specifics. Refis are down 24% last year versus this year, but we're still almost at 2 trillion. We're also a majority refi market, about 52%, right? But you will notice this trend. And the reason I kind of label this as mood, if you will, is because I know this pulse from the LO trenches from years and years. And the mood is definitely like, people know something's changing, but the mood is what your production says it is. And what our production says it is still right now in this moment is that things are going really well. $500 million quarters. But we are on day 7 of Q3 right now, that second bar from the right? So we're on day 7 of that. So it is going to start changing, and it starts this week. So I just, think that it's important to sort of emphasize it on this quarterly basis. Now, let's compare last year to next year. And I am going to switch. Oops, sorry, there we go. So we go from 1.8 trillion in refis this year to 621 billion next year. And I think this image pretty much speaks for itself, right? So this is where we're heading. We have 2 quarters to kind of adjust to this. And there are still lots of refi units to get. We are going to talk about that today. But this is where, it should sink in that the plan needs to start to shift. If we start to look at purchase, it's very, very steady. We're definitely up 1.43 trillion to 1.6 trillion in purchases last year to this year. And anyone who's running a good purchase playbook kind of knows what to do, but we're going to talk about it on a multi-channel basis today and really talk about tactics to get this done at the borrower level and specifically at the tech stack level, and how does it power you? And just again, comparing last year to next year, you'll see it's resoundingly the same. We go up a little bit from 1.6 trillion to 1.7 trillion, but on a quarterly basis, you can see we're operating in a very steady environment. So the recalibration is steady for those orgs that are willing to lean into just how stark this shift is. So with that said, we're just going to kind of jump right into this question. And Robin, I'm going to start with you. It's a quick setup, and then we're going to really dive into the details. So open-ended question, just to kind of warm up here. In that environment that we just went through, just quick hits. I know we're going to go deep on a number of these, but just some quick hits and thoughts on how are you supporting loan officers in a purchase market? And I'd add one layer to that question, which is there any difference by channel, especially in your shop?
Yeah, for sure. Thank you so much. Yeah, some of those numbers are really a bit of a wake-up call. Absolutely. Refinances, obviously, it's risen all boats in the industry. We've done really well. A lot of our other peers in the industry have as well. But refinances, when you get down to it, are essentially math, right? Am I going to get a better deal, a lower payment, a lower rate? Purchases, on the other hand, are really about the customer experience. And in order to free up our originators, whether it's in our retail channel with our loan officers and our producing branch managers, or in our wholesale or correspondent channel where we are supporting other originators in the space to make them feel really successful, we need to free them up. So if they're going to be there listening, educating, and engagement, they need to not be doing data entry, shuffling papers around, trying to figure out who to call next. All of that needs to be served up to them. So that's really where our partners come in. We work, with folks like Alex and with Sales Boomerang and with Jerry at Volly to make sure that it's automated, it's more efficient. When they wake up in the morning, they have a to-do list. They know who they need to call. They know what the scripts are. Or in Volly's case, it just goes out for them. The emails, the text messages, all of that dialogue is happening for them. So really important. And I think that's the job of any sort of corporate or centralized marketing or digital lending team, is how can you serve your loan officers? I remember a long time ago, I was getting really upset that our loan officers weren't logging into a CRM. And the CEO got super mad at me. And he was like, why? Why do you want them to log in? That's not their job. That hit home to me. It's not. Their job is building relationships, taking applications, nurturing, developing referral partners. It's not, okay, what's their birth date again? Doing that data entry and doing all that kind of data around. So we're really committed to that. We're really committed to automation and to serving them so they can go out and really serve their clients, because that's when we're going to win.
Yeah, no, and I'll just underline one point, and then we'll keep moving so we have time to get to everything. But keeping the loan officer out of not only the LOS, but yes, out of being bogged down in systems where it's like, what do I even do? Because it does. I think it happens, and it happened in the refi market of like, where do I even begin? It's just like there's deals everywhere. Purchases have a different set of complexity though, because you got two realtors on every deal. You don't get to choose your title companies. Like, you have a lot to orchestrate. So yes, like making sure that it's all easy and removing all this inefficiency, Alex, right, is kind of one of the kind of core tenets of how you see the world, right? So can you just set this up for us, and then we're going to go through a few core inefficiencies, right?
Yeah, I mean, look, it's so interesting, and I'm going to bring up an interesting example that I had just 2 days ago with a friend of mine that's actually not in the mortgage industry, but in the nursing space. Said something, how technology changed the way you guys operate and work inside the ER and in the hospital in general. And he said there's not enough of it. We are still taking notes on everything we're giving the patient that we need to detail and add to the insurance. And it's like it's adding minutes and minutes and minutes and minutes. And by the time you're done, you're 33 minutes into writing notes instead of looking at patients and talking to patients and finding out how you can help them. And since most places are understaffed, it's terrible. They said we need more technology. And so this is the thing, right? In the hospital example, people might be dying because you're taking notes. In the mortgage example, if you're busy doing busy work, I had a mentor who was in his 80s, and he said, don't be busy staying busy. right? It's dizzying. Like so automation efficiencies is everything. Right now in a compressing margin environment, efficiency is profitability, right? If you're not efficient, you're not making money, you're not making great money, or you're doing loans just to do loans, just to say you're doing loans. And so efficiency and being very purposeful and removing friction and steps from your team is key. And of course, you're going to hear me talk about this as we continue this conversation. You want to have a tech stack that communicates to each other and is not in silos and say, I have a good piece of technology, but it's over there, but I'm working over here. And so you're going to see that that's all part of this efficiency conversation we're about to have.
All right, well, let's get into it. So there's going to be 4 major inefficiencies. So I'm gonna bump to the next slide, and why don't you set this one up?
Yeah. So look, it's having, again, this is going back to exactly what we were just talking about, and it starts with this, right? Nobody wants spam delivered to their email, to their voicemail, to their text. Because by the way, we have to look at this as we are our own consumers, right? We don't want spam. We want reasons, valuable reasons to talk to an advisor, to make a financial decision, because what are we in? We're in a financial industry which helps people get into a financial vehicle. It just happens to be a mortgage that also represents a roof over somebody's head, right? And so the messages that we deliver to our customers should be very purposeful and specific to that customer, and not a blanket covered message to everyone, which is what most organizations have relied on, is like this rule of 30 or 40 or whatever the new rule is of just reaching out to a customer just so they can remember you. Well,
40 pieces of content per day.
Oh, who's got time for this? and so look, efficiencies is also about being efficient with your messages and purposeful. You don't want your customer to miss the important message. Okay. You don't want them to miss the important one. And so there was a great, I was speaking at a conference, I think it was definitely a couple of years ago, because it's been that long since we've been out and about.
Hey guys, I'm just doing a quick sound check. Was that me? Can you guys hear me, or did we lose
I've been
Alex?
getting my mail.
There he is.
He's back.
All right, Alex,
Yeah.
just back up. On the road, conference circuit.
Yes. So I was speaking to someone, and he said, "Look, I got a call from my loan officer, and he's like, 'Hey, I haven't heard from you. I've sent you lots of mail. Some of it was important.'" And it was like, "Why don't you just send me the important stuff and nothing else?" Right? And so this is the point, right? They will miss the important things if you're sending everything. Okay. So let's go to the next slide.
Yep.
So look, your consumers, your borrowers, the people that we service, right, are going to have on average 11 mortgage related transactions from their first purchase to the last sale, or their final reverse, whatever it's going to be, about 11 mortgage related transactions. You want to be there for all of them, right? The goal is, if you meet them on the first, you don't want to miss the second, third, fourth, all the way to the 11th, right? You want to get the next 10. If you meet them somewhere in the middle, in the fifth or sixth, you want to get the next 5 or 6 of those, correct? So you want to be efficient. You don't want to just bombard your customer. I've spoken to people that do a loan for someone, and then 3 months later, they're talking about how they can help them. 6 months later, talking about how they can help them. 7 months, it's like, you just finished my loan. Talk to me about what happens next instead of what you can do for me again today, right? Where is the understanding of me in your organization, right? So you want to make sure that you're there, and you're there for them at the right time. Let's move on to the next one. Remember, we're talking about efficiencies. This is one thing the industry is not really good at, right? We did this deep dive into a study, retention, okay? And this white paper is available. It's on our website. Maybe Richard, you can throw a link in here to that for everyone to see. But what you're looking at here is each industry and the retention rates from each industry, okay? As you can see at the bottom, that 18%, that's the mortgage industry. And so it tells you, okay, if we're talking about efficiencies, it's showing you how inefficient this industry is, okay? Because we are spending a ton of money on outreach, a ton of money on advertising, a ton of money and for some reason we have failed to show our customer that they can trust us again. Just trust me again, just at least one more time. Somehow we miss that. And it has a lot to do with just throwing messages out there that don't belong to me, but you're sending them to me. And then it's noise. And when it becomes white noise, I no longer want to communicate when it's not valuable. I no longer want to communicate with you. And all of a sudden somebody else takes that business away. So efficiency isn't just about profitability. It's also about recapturing, repeat business, referral business, right? And you can see how inefficient the industry is here. And there's a way to solve this. And we're working towards that now. If you want to go to the next slide. And so look, this is a problem, okay? When you have 70% of people saying, hey, I'd love to do business with my lender, with my current lender again, but only 18% actually come back. And so what's interesting is, first of all, a quick call out to experience.com. The 70% of consumers, they did an independent study, and 70% of consumers said through experience.com, which is a social survey for those of you that may not have known the name change, 70% of consumers said, yep, would love to get back with our original lender, but then only 18% come back, which is the Black Knight study there. And so that's such a wide gap. That's a huge difference between who's saying they want to and who actually does come back. How do we solve this? How do we, especially in this purchase market that we're going into, how do you make sure that you're the person there's, and look, you have to be battling some of the agents out there that might be referring people to their own mortgage lender, right? How do you make yourself the exclusive mortgage lender? There's ways to do that. There's ways to take advantage of all of these efficiencies that we're about to talk about to make yourself more attractive to your agent partners, to make the customer choose you by name and say, look, Mr. and Mrs. Realtor, thanks for the recommendation. I got someone I'm going to use. One more slide.
And this is where, I can't wait for this one, because this is where we start to really get into it.
Yeah. So look, this is one of my favorite slides too. There's a couple things to look at on this slide for you guys to understand. The very top section talks about the performance that lenders that are using a system like Sales Boomerang, that's what they're getting. Average $24 back for every dollar invested, 20 to 40% lift in loan volume in a year, right? That's a significant. And this is the most important one, top right-hand corner, okay? $299 cost of acquisition. Right now, we're talking to a lot of lenders, a lot of banks, a lot of consumer direct divisions, especially, who are now spending, and Robin, we're going to be talking about this with you specifically, we're spending over $1,500 to acquire one customer, where with an efficient program like this one, an efficient system that focuses on events that only tell you when you can help your borrower, you're looking at sub $300 cost of acquisition. And how's this possible? Well, if you look at the chart below, these are all the different signals that we send to our lender partners. Now, look, if you see that number 13.5, it's a huge number. Let's just be honest. It's a huge number. The top end of the number of opportunities that live inside your database on a monthly basis could top 13.5%, meaning 13.5% of your customers will have an active event. And by customers, I mean your customers, your leads, your prospects, your pipeline, your turndowns. Those are all your customers. When I walk into a store and walk out, even though I haven't purchased anything, that store sees me as a customer. I just haven't bought something yet. So even though you have a lead or a prospect or somebody in the pipeline or somebody you even turned down, they are a customer. They saw your brand, they spoke to you. It is now your job to get them back to you. So you're looking at topping off at 13.5% right now. That's a high end. Right now, what we're seeing our clients is about 7%. 7% of your entire database every single month will have an event. That's over 80% a year of your database will have a mortgage-related event that you can help them with. In the market that we're in, especially now, discovering the people that need you now is so important. So having these insights, having this information, like your customer that wanted to be approved for the best rate possible, but just didn't have the credit. Imagine being notified when they're qualified for the lowest rate possible market, and you're there before anyone else is there, and you're delivering the good news, right? That's the important thing. You want to build trust, deliver good news, because sometimes the mortgage industry can be bad news. What if you just focused on good news, and everything in this list that you see here are all good news that you can deliver to your customer, and you have a great reason to reach out. Hey, Mr. and Mrs. Customer, looks like you're qualified for this loan with us, this cash out, right? Let's take advantage of what you have going on in your equity and opportunities in the market with these low rates. So, or of course, purchase opportunities, being able to deliver referrals to your realtor partners, which you can deliver way more referrals back to your realtor partners with all of this. And I'd love to get into some of this conversation with Robin as we move forward here.
I was going to say, if we could, before we go to, before, before we go to inefficiency 2 though, Robin, if I could, because you are so granular about all of this, do you have maybe a 2-part question? What are your favorites of this kind of list of alerts? Like what are the things that either you and or your sales force is like, these are the ones that we love and that are most impactful, convert the best. And then also what ones are in fact just straight up from your analytics converting the best?
Yeah, good question. I was actually looking at that, and I think our cost per loan is actually a lot less than that. So that's good.
That's huge.
Yeah. The mortgage inquiry one is obviously the big mothership. That's where we get the most action. And it's really, really helpful. It gives our loan officers real-time intelligence when their clients or their prospects are shopping around, or even as an indicator that they're ready to refinance. I will say I do have to do a lot of coaching for our originators to put their ego aside. It's like, yes, we know you thought you were the only one in their heart, but yeah, they are going to look around and they're going to try to find the best deal. And it's up to you to really step up to the plate and re-engage them and give them a reason to work with you. You have to earn that business. That's one of the reasons we love purchase, because it's sometimes with refinancing, it's really a dogfight. But that watch, absolutely, it's a non-negotiable. I've worked at other mortgage lenders that don't have it. And they just feel like they're blind. And that's really what Sales Boomerang has done for us. I swear this is not a commercial. They cover our blind spots because, you know, the cost to extract this data, analyze it, and serve it up into a loan officer, which is sitting there in their email inbox, and they're like, oh, okay, I got to call this person right now. Logistically, it would be a pretty steep hill for us to climb. We have other things to do. We're a mortgage company. We need to focus on having flawless origination and fulfillment. So that is really where they help us succeed. The other watches are really interesting. And we've been doing a lot of training, partnering with Sales Boomerang to help our loan officers navigate that. I always tell them when they get these alerts, you don't ever want to call up a client. Same thing if you are sending out emails and you get a notification they opened your email. You'd never call a client and say, so I saw your opening my email, or I saw this alert. I mean, you need to know how to do the scripting, how to do the talking, how to make it feel natural and authentic. That's super, super critical. And we provide a lot of training and coaching for that. The listing watch is super interesting. It's a great—
I was going to ask about that one. Yeah.
Yeah, for sure. Loan officers can talk to their clients and just say, hey, you're listing your home. You automatically can do the math there. They're looking to buy another home and they're going to need to get pre-approved for a mortgage. And the really savvy originators will actually include the real estate agents in that conversation. Once again, put that ego aside and think, okay, they're listing their home. They're going to need to buy a new one. Perhaps you can serve as the agent and also stand in the wings. If that listing agent that they work with isn't performing, then you can step up and you know, have an opportunity to earn their business back. I could go on and on for this.
I want to, if it's okay, because and we're going to keep going, but I do want to add one more note before we go to the next major inefficiency, specifically on that last point that you made. Everybody on this call, remember this as you're rebuilding your purchase muscles. In that case where they have clearly already connected with a listing agent, 2 things. 1, that listing agent very likely is going to refer them to that listing agent's favorite lender. So you need to stop that. And this helps you do it. And number 2, to Robin's point, at the same time, you do have to earn that listing agent's cred. And when you do, that's a new realtor for you. So I just want to underline those 2 points. They're super critical tactical elements that this type of a tool make very real for you. Puts the opportunity right in front of you. With that said, I do want to keep moving because we do have more ground to cover. So
Okay.
Alex, can I flip to the next major
Absolutely.
inefficiency? Okay, cool.
Yeah.
Oops. Wait. Yes. Hold on. That's right. So we did just cover this. I apologize. We kind of skipped ahead and this was the question, but I just wanted to do it while we had the data in front of us. So we kind of already did this. So can I, Robin, are you cool if we keep going since we just covered this? Thank you. All right. Alex, take it away. Drive the
So,
bus.
ooh, all right. So major inefficiency, and this is where I'm going to hand it off to Jerry here in a second on the speed part of it. But and this is where obviously Volly shines is speed. And I love first of all, I love this movie and love this logo here. So getting to the conversation as fast as possible is key. Again, sales boomerang tees it up for you, but how are you able to get there quickly and efficiently and automatically? That's where somebody like Volly comes in. So Jerry, why don't you jump in there and see what you can do here?
Yep, absolutely. I think, Jillian, if you want to kick over a couple slides.
Yep.
You know, speed is important. I was just teasing you earlier when I said you were commenting on my age, but I am going to have my 30th anniversary in the mortgage business next Tuesday. And
Wow.
so,
Congrats, man.
and my first call center I ran some, almost 30 years ago was all about speed, right? So speed is not a new thing. It's not, it's not something that's just come on with the digital evolution. The beauty of today, at that time, speed meant you had to have lots of people on a phone switch to answer the phone within 3 seconds of when it rang, or the borrower would hang up on you and call someone else. So it's a different solution, I think, that a lot of companies are using today, but it's the same problem. And if you look at this slide, 79% of borrowers will go with that first lender that they talk to. 92% of them go with either the first or the second. So if you're third or fourth or fifth in line, your chance of converting that borrower at that point is very low. And it's even worse, to your point, Julian, if they have a realtor already involved, it gets even more difficult at that point to convert that. So a lot of the programs, as Alex was saying, our objective is around speed and communication, which we'll talk about in a little bit. But from a speed perspective, our programs are really designed to leverage that loan officer, start that engagement with that borrower before the loan officer even has an opportunity to go talk to them. And if you flip over to the next page, this is a study we did with one of our national consumer direct lenders. So this was a call center based lending partner that we work with. And before this program, they basically had leads would come in from these three lead sources, and they would queue them up in a phone switch to make outbound calls by loan officers. And you can see their conversion rates, for each of those in blue. Pretty low conversion rates, pretty much the same conversion rates we had in 1991 when I was running my first call center. So the whole conversion rate from phone calls hasn't gotten much better. But what we did, and this is work that actually Grant and Home Captain, which we recently acquired, did this work. But we instituted a digital engagement strategy along with our concierge service. And you can see the funding rates for those same leads went up dramatically from those lead sources. And what we were doing is we were engaging on behalf of the loan officer in a digital fashion as soon as the lead hit, right? And then we were using our concierge service, which is really a service that we have that connects the loan officer and the borrower with a real estate agent. So you're engaging and you're building that bridge, as you were saying a minute ago, with those loan officers. And that helps that conversion rating to get that loan back to that lender where it started or where that lead started. So it's a pretty, pretty telling increase in funding rates, as some of Alex's comments a minute ago. These strategies really can drive significant return on investment, really lower your cost to acquire new customers.
And I know we're going to talk a little bit more in the next segment about app rates and driving up app rates, and that and specifically that realtor connectivity, but sticking with the speed component. I know if Grant was on, and Grant, for those of you guys who don't know, he's the CEO of Home Captain. And just to underline this, for lots of news flies around really fast, but long story short, last month Volly acquired Home Captain, and Home Captain, through some of these digital engagement components, Robin, it's predominantly been built in a consumer direct context, but it does start to do some of that automated engagement of even saying, if the loan officer is away, can we at least say, hey, we've got you. We'll get back to you shortly, and taking some of the AI communication that has been built into the Home Captain platform and applying it more toward that sort of, if you will, traditional, more retail oriented sales force. Right. So, Jerry, do I kind of have that right in how it
I think
translates?
yes. The combination between Volly and Home Captain really brings that realtor connectivity to the loan officer. The Volly platform drives a lot of engagement digitally with the loan officer, irrespective of the realtor. So when you put those two together, you just get an additional lift in your conversion rates. But yeah, that's exactly correct.
And last quick note on this, Robin, I know that every shop, and I think including yours, I just want to confirm this, has teams of super producers that actually, even though they're retail, they are buying leads and they are trying to figure it out. Right. And that's where a tool like this kind of comes into play, because you've got when I was running heavy production, we did do that. We did our traditional database business, realtor business, and then hey, let's experiment with buying leads, because we believe that we can do the conversion better, because we know the relationship better. But speed, especially when you're buying leads, is the hardest part. But quick question for you, Robin, do you have certain retail teams within your footprint that do also buy leads, even though they're quote unquote retail?
Yeah, 100%. Yeah, some of our biggest branches use that model and buy a very high volume of leads. They need a pretty sizable staff and a really good tech stack to make that happen. So
everybody, just note that you can play in that space. And if you choose to, you don't have, if you're wiring it right, so to speak, with the right fintech, you can solve the speed thing, then combine your relationship component that will drive that conversion even higher in the, case studies that I have seen. So I do want to keep going though, because we still have more to get to. So should we keep going?
Yep.
Okay, cool. All right. Next, Alex, do you want to tee this one?
So, look, okay, good. I thought it was on mute for a second.
Yep, you're here.
Major efficiency number 3 is communication. This is, and I think this is probably more of a good tee up for Robin to talk about. It's engagement. It's once again being clear, timely, and concise with your messaging, your communication. So I think there's a question coming up for Robin right after this.
Yep.
There you go.
Awesome. Yeah. So one of the things that I've really liked Volly, and I've actually partnered with Volly at multiple mortgage companies that I've served at in different types of channels. And where they really shine is being thoughtful about the content and the way that they message consumers. So instead of sort of the generic, it's a great time to refi just over and over and over again, it's very targeted and sort of strategic kind of pieces. So there might be 3 different variations on a sort of a, let's say, a refinance campaign with specific landing pages and all that kind of stuff. So it's a lot more, what do they say, like a sniper rifle versus a shotgun kind of thing. Mm-hmm. So that's where I think Volly really shines. And I've enjoyed working with them because they do understand how to communicate with borrowers. They understand the type of language, the type of graphics, the type of presentation that they're on their mobile device 90% of the time. So start with mobile first design, all those sort of fundamentals. We are also experimenting on our site with our wholesale channel, and particularly partnering with both Sales Boomerang and Volly to see how can we serve our TPO partners better. So instead of, well, if you were a part of a huge retail enterprise lender, maybe you'd have this cool tool. No, we're going to give you something where you can be competitive with the larger players in the space, and get marketing automation, get targeted campaigns, get more intelligent data at your fingertips without us wholesaling you. We're very, very protective of our TPO partners, and we have just sort of an ironclad wall in between our divisions. So it's really important to have this ecosystem where they feel supported, they feel that they can act on their database and get intelligent data with really good content. So I'm really excited about the work we're doing. I haven't heard of a lot of other folks kind of maneuvering in this way, but I think it's a really great partnership that they have together.
And I know we're still going to do more on purchase, but I have to underline the point that you just made about the rifle as opposed to shotgun approach on refi. And let me just go back to the to the stats that I shared as we kicked off. This quarter that you all just closed was 590 billion in refis. The quarter that we just entered 7 days ago, 300 billion. The fourth quarter of this year, 145 billion. So if you don't have your sniper rifle approach down, so to speak, this is the time you need to listen to people like Robin, because, excuse me, this is the stats are very real in all of that.
And it's important too, and I think what Robin is mentioning is it's important to understand where your customers are, how they like to be communicated to. And this is the thing we'll talk about towards the end of this, but we are all working in this together. It's not Robin saying, hey guys, give me something, and then we give it to her. We're throwing ideas over to Robin. Robin is responding to us. They're throwing ideas to us saying, can you do this? Can you optimize this campaign? Or can you give us this piece of insight that we may not have? Or how can we get our broker partners to have even easier conversations, just more confidence? So it is this relationship between, and this is coming towards the end, so I don't want to give it up. It's probably one of the best questions I've, to end with, so I won't give it away. But the conversations that you're having with borrower, back to lender, back to partner, back to lender, back to borrower, it is so important to have that direct line and not have it filtered and muffled. But to the communication point, I think it's so key to understand where your customers are, how to optimize those messages. We're working with Robin right now, really for everyone, but Robin is our key partner on this. We have a behavioral science team that we brought on, probably one of the best behavioral science teams in the country for finance, that we're going to tweak such little tweaks to messages that make all the difference psychologically, that is to increase the ability to respond to Robin's messages, to the brokers that want to get in touch with those customers. Because if you have something valuable, we talked about this, if you waste their time with spam, then they'll miss the important messages. So if you can limit your messaging and make them hard hitting and get them to respond, then you're going to be more likely not just to have more deals, but to actually gain trust. And so, sorry, I just wanted to jump in.
No.
Perfect segue.
Continue. Yes, because this is the mechanics. So let's just talk mechanics for a minute. So if you want to keep going, just keep going. But I just wanted to put this up because this goes to, we can talk about communication, but here's the mechanics of it.
So I'll kind of walk through this. We put this together, and to go back before I go through this, Robin and PRMG have been great partners. They not only challenge us, but they give us an opportunity to do things that we really want to do. But sometimes it's hard to find a client who, wants to try new things. And so we really appreciate our relationship with Robin. But really this is really kind of how we view the process kind of from end to end. And if you look at the far left-hand side, leads can come into a lender from many, many different sources and into our system from many sources. We get lists, we get database uploads, we get direct integrations to CRMs, whether it's our CRM or another CRM. And then we have partners like Sales Boomerang, where we're actually getting triggers directly from Sales Boomerang, feeding into the process and then kicking off the nurturing process, what I call that middle part, which is the nuts and bolts of the sausage making, of trying to take a lead and convert them into someone who engages in some kind of call to action engagement with the borrower. So what we're doing in those phases with our clients is a number of different strategies. One strategy by itself, doesn't get you the best results. Some people like email, some people like text, some people want a phone call. There's all different avenues that you can go after borrowers. And so we like to build programs with our clients that have multiple components. So we do a lot of digital lead nurturing, whether that's email, text messaging. We do a lot of concierge work along with those clients, where we have people who will chat, text, get on the phone, connect borrowers with real estate agents, connect that back to the loan officer, along with the digital engagements. We have real estate hubs, we have loan officer hubs. All those are tools that we can deploy to engage with a customer where they want to be engaged with, when they want to be engaged with. That doesn't require a high paid, high skilled loan officer to make every phone call themselves and talk to every customer themselves about everything that's going on. So we view this all as a way to make them more efficient and facilitate their interactions, but get the borrower to them when they need to get to them, right? So almost all of our strategies have call to action focuses. To Robin's point, they're very rifle-ish, not shotgunish. So there's specific messaging with specific call to action activities. And then we can hand that off through warm transfer to the loan officer. We can post it to a CRM. We can push the borrower to a point of sale. There's all different avenues where we can continue to facilitate that transaction on behalf of the loan officer, all branded, co-branded with the loan officer. So it all looks and feels like it's coming from the company and from that specific loan officer. And really try to leverage that so the loan officers getting involved when they need to get involved, and they're not, doing a lot of inefficient, tasks for them. As Robin said earlier, you want them out there building relationships and nurturing customers, not processing, emails and things. So that's really kind of the way we view it all. And we feel, really strongly that it's a good strategy. If you flip over to the next slide, we did a case study with one of our customers. It's a top 5 bank customer. And we were looking at, to kind of pull this back to the purchase discussions, we were looking at purchase leads. And we all know, particularly in the purchase market, that there's a lot of customers who will, come in, they'll get pre-qualified, and they'll go find a property. A real estate agent will direct them to someone else, and you lose that loan, right? And the statistic on the left side was where this particular client started. So their base study, purchase leads, where the borrower didn't yet have a property, and only 25% of those came back to be applications within the bank. And that's when they were just running the program with loan officer only engagement, right? So no supplemental engagement other than the loan officer calling and trying to track down those leads. And then what we did is, again, we put in digital engagement. We put in our concierge service as well that connected those purchasers who hadn't found a property, connected them with a real estate agent in their local market. And that program is designed to keep that loan back with the lender, right? Can't guarantee that. It's illegal to guarantee it, but it works, right? People build those relationships and they honor those. And we improved the application rate on those from 25% to 88% of those purchase leads then ended up back with that bank. So these strategies do work, and they are good leverage points. And in a purchase market, that realtor has a pretty strong relationship and a lot of influence over that borrower. So building these realtor programs, these realtor engagements, connecting that all together and making sure your loan officer is involved in that process throughout the home search is really critical to getting that application back into the lender.
Mm-hmm.
And so I just want to make a couple quick notes on this before we move to our final section and bringing this all home and going to Alex's teaser. We're going to talk about who's the customer, right? And it's a fun conversation as we close out today, because who is the customer really? And we're going to get to that. But before I do, let me just quickly summarize for you guys what Jerry just said. And Robin, we'll tie this back to all retail shops are trying to also figure out, in this new world where customers are just out there and they might not come to you as they do traditionally, even with all your best feet put forward on traditional database marketing, they're on the real estate portals, they're everywhere else. So if you are retail, but you're looking to buy leads, it's like this. You're going to get to that customer before they have a realtor. You pre-approve them, then they go and shop on their own, and then they get picked off. That's what this slide is talking about. And what Jerry's got in the Home Captain team is a nationwide network of realtors. At the incubation of Home Captain, they were incubated actually by the National Association of Realtors VC called Second Century Ventures. And so they kind of had all the connections with all the local MLSs. So they have cred on the ground. They connect realtors. So I've done this inside retail shops where we're building a hybrid model of like, hey, top producer teams here, and here. We're going to buy leads, but you're going to get to the customer before they have a realtor. You don't know realtors in these new markets you're working in. This is where the realtor gets introduced, and that realtor is therefore going to keep that deal with you instead of it going away. So that's what this is about. So Jerry, did I capture that correctly?
Yep, that's exactly right. And it's we have a very large network. We supplement that with the digital engagement as well as the concierge service, and it works very effectively. And last year refis were falling out of heaven, and so it wasn't that big of a push with a lot of loan officers. But going into the market, we're going to see for the next 18 to 24 months, this is going to be a really critical part of the program if you want to capture those purchase loans.
That's right. And so again, Robin, like as you continue to serve those teams that do buy leads, like this is the part that I just love, because this is the biggest hole for all retail hybrid experiments, if you will, because everyone was experimenting with it pretty heavily before this massive refi boom came. To Jerry's point, it's red hot again in terms of, am I going to buy purchase leads? If I can convert them, sure. And this is the answer. So let that one sink in. I do want to kind of bring this home because we're getting close on time. And on that note, we're going to kind of go to measurement. And Robin, this is, I think, a very close to home topic for you. So in the interest of time, guys, if it's okay, I'm just going to kind of jump right in with Robin and just kind of like, let's get into it. Let's for now stick with purchase, but you can jump in on Robin refi on this question too if you want. But I know you love staring at data and seeing what's working and what doesn't, right? So so any couple quick notes, best practices on how do you make sure that you're improving on all this stuff and not just providing the tools and keeping the loan officers out of their systems and getting bogged down?
Actually did tell a vendor that reports were my love language.
Nice.
Yeah, it's so critical. I've really enjoyed working with leaders and with lenders who get this, right? Measurement and being okay to be uncomfortable with saying, wow, we're not the greatest. We're not really doing good with our response times, or, our speed isn't as good. So you have to know where you're starting, and working with partners that are committed to analytics and a lot of it and frequency, and then being able to make the connection with it. It is quite challenging, I will say, with digital marketing. I'm sure you've all seen this statistics of anywhere from 8 to 30 touches before someone actually decides to work with a lender. So it could be anything from a programmatic ad to a real estate agent mentioned it on a Facebook post who I heard, my cousin talking about at a dinner party. So being able to measure all of those pieces, whether it's from your LOS, your POS, or your vendors, doing self-reporting for the loan officer, see where you are today, and then set reasonable benchmarks for the future. So for example, if you wanted to increase your conversion, you have to understand where you are today, make sure your data has integrity, and then set a benchmark. Maybe you want to improve 5% or 10%. One of the things that we love to focus on, and I've said my whole career, is I'm not interested in serving the top 10% of originators. I have nothing to teach them. They figured it out. And if it ain't broke, don't fix it. I leave them alone.
I love that comment.
And I'm not really interested in the bottom 10% of originators. If this is just a part-time job, maybe you found a way to get some benefits, great. Where we're interested in is that middle 80%. How do we get someone who's doing 2 loans a month and get them to 3 loans a month? And the way that you do that is through measuring and support. So yeah, we're super committed to this. This is how you win. Instinct is so important. And I've been so privileged to work with leaders who just have great guts and have been really lucky. But to get to that extra level, you're going to need metrics and analytics.
Yeah, I love that comment because so often it's the opposite. Like the top 20 do 80% of the production, and yes, of course, fulfillment and operations teams are always going to support those top producers, but we're not talking necessarily about production in this case. We're talking about net new loans. And you're absolutely right. The bell curve of your loan officer population is where those net new loans come from, so I love that. And we are a little close on time. So I'm going to go to our last question because it is fun, and we'll stay with you, and then we'll run to you, to Jerry, and to Alex to kind of close it out on this last question. So, Robin, starting with you, who's the customer, the loan officer or the consumer?
Love this question. The answer is absolutely both. We get so focused on, what does the borrower want and what their needs are. But if you are not serving your loan officers, making sure they are getting the support when they have a question or they're getting blocked or they're confused, making sure they have everything they need. And if they're happy, if they're motivated, they will be your best recruiting tool in the industry. It will provide amazing customer service, and it all trickles down from there. So yeah, we are committed to creating a good internal and external customer experience. All of these people are our customers, and that's how we win. PRMG is built by originators for originators, so we want to make sure we take care of them so they can also take care of our clients.
Thank you. Jerry, same question.
Well, Robin's my customer, so.
Good answer.
Yeah, but we at Volly, we view our lenders as our customers. To a certain extent, real estate agents are also customers of ours, and that we're trying to connect those. From a technology, the fintech part of our business, we really focus on loan officer technologies and technologies that facilitate the loan officer's interaction with the consumer. So from a technical roadmap perspective, we focus a lot on how to improve loan officer experience. But we really look as our lenders are our customers. That's the population that we're here to serve. And that we're very much focused on that front end sale part of the process. So very much loan officer centric, whether it's retail or direct to consumer or wholesale, loan officer in our view is a loan officer.
Yep. Thank you. And Alex, let's split into 30 and 30, you, then me, and I'll close it out for us. So what's your answer to the question in 30 seconds?
Listen, I think what Robin and Jerry both said are perfect, great answers. And our knowledge customers. You're going to hear me talk about this a lot this year moving forward. We all coexist. We all work together. If we can help Jerry help Robin, then we've helped Robin, right? Who's our client. If we help Jerry who helped Robin who helped their borrower, then we've really helped everyone in this ecosystem, if you will. So for us, we have to understand and really internalize the fact that we all coexist. We work together. We are just as happy for Robin's success as she is for her own success, for Jerry's success. It's all about how do we get the best in class constantly working together to help, of course, the borrower, to help the loan officer, to help the lender, to help our other technology partners. So that's kind of how we look at it. We all coexist.
And that's why I love your perspective, because you are just here to serve the ecosystem, and everyone appreciates it. And I speak on behalf of everyone when I say that. I'm going to close it with this. My answer is the consumer is the customer. Last year, this industry did 12 million units. This year, we'll do a little more than 10 million units. That's without those units, there's nothing, right? Everything we do is going after those units and sharing them amongst our whole ecosystem. So to me, the consumer is the customer. And if that's the North Star for everybody, the ecosystem, there's more than enough room for everybody in this ecosystem, Alex, to your point, to all work together. So on that note, it's super fun to work together with you guys on this stuff.